We're talking about how to build and maintain an excellent credit score because there's so many benefits to having a good credit score, right? And it really feeds into the whole thing of becoming financially free so that you're not feeling as though you have to work, but that you're feeling like you get to work. You know what I'm saying? Because you're doing work that you love. Like you have that freedom of being able to choose your work based on what really fulfills you and not based on how much they're going to pay you. One of the big things that we have to really nurture is our credit. We have to build and maintain a high credit score. How do we check our credit report? Well, print out your credit reports on a routine basis. Very important because you want to check your credit report. Now, how do you check it? You visit annualcreditreport.com. Now, there's different services out here, but really, the only website that is officially endorsed by the federal government for checking your credit reports is annualcreditreport.com. That's the official website endorsed by the federal government.
And it's free.
And it's free. It's free. And you know, before COVID, it was that you could get a free copy of each of your credit reports from the 3 major bureaus once a year. But now since COVID, they changed the rules because of all the scams that were coming out, and now until the end of this year, at least, they have a situation where you can check your credit report every week, you know. So a good question to ask your parents is, ask your parents tonight, you know, have you checked your credit report lately, you know, and then tell them, you know, because your parents might not be aware that they can go on Annual Credit Report and check their credit report for free.
And their banks might be offering it as well.
Their banks also, yes, that's right. Your credit reports can significantly affect many things, like your mortgage rates, right? To get the best mortgage rate, to qualify for the lowest interest rates for mortgages, you have to have a high credit score. I'd say that from my experience in the loan industry, you know, if you're above a 760, if you have at least a 760 credit score, you can qualify for the best mortgage rates. You know, so also mortgage rates, also insurance rates, right? I mean, you know, it's amazing. A lot of people are not aware that your credit score also even impacts your insurance rates. Also, you know, your credit card approvals, you know, obviously. Your apartment rental applications. When you try to go to rent an apartment, they're looking at your credit score. And even your job applications, especially if you're applying for a job that's in the financial industry, right? You know, they're going to run your credit. Because if you think of it, your credit report and your credit score, it's like a report card that measures how well you manage your finances, right? So that's a very important report card. Also, checking your credit reports can help you catch any signs of identity theft, right? Unfortunately, in our world, there's a lot of scams, a lot of fraud. You want to really monitor your credit reports. The sooner you are able to spot a mistake, the sooner you can dispute the error, or if it results in identity theft, you can report it to identitytheft.gov. So you want to review your 3 credit reports, right? And there's Experian, Equifax, and TransUnion, and you look for errors or any negative items, right? Also, you want to even look for like spelling errors, math errors, all that kind of stuff. You know? If you write down this website, www.roadto750.net, Road to 7. It's a website that's designed to help people who are trying to repair their credit and like maximize their credit score, maximize their credit score. So it's a really cool thing to kind of check out. You can kind of read through different materials on there about credit repair. Okay, now here's a big one. How your FICO credit scores are calculated. Like, how do you calculate it, right? Because you know the FICO score range is from 300 to 850, right? So that's a total of 550 possible points. And so the question is how are those points calculated? Like, how is your score calculated? Well, the number one thing that impacts your credit score is your payment history. Meaning, how well you've been paying your bills on time, right? And it makes sense. It makes sense that your payment history would be the biggest factor in calculating your credit score, right? Because remember, your credit score is like your report card for how well you are managing your finances. And the biggest thing that you can do, the most important thing that you can do is always pay your bills on time. All right. Here's a little tip: is when you have a credit card, set up automatic payments, right? So that the bill is automatic, so that the bill is paid automatically, where the money is taken from your checking account automatically to pay the bill. And make sure you have enough money in your checking account to pay it. But because you don't want to just rely on your memory to try. You know what I'm saying? People get busy, and you don't want to have to be manually paying your bill. You want to set it up where it's like auto pay.
And it's easy to do online banking.
Yeah.
I can do it, so you guys can do it.
Yeah. So 35% of your score comes from your payment history. So your payment history is worth up to 192.5 points. It is influenced by things such as the total amount of payments posted, the percentage of on-time payments, the time since your last late payment, the amount of collection accounts, the amount of charge-off accounts, the number of accounts being paid as agreed, and the progression of overdue accounts, 30, 60, 90. So meaning like the longer that your account is overdue, like a bill is overdue, the longer that a bill is overdue, the more it's going to hurt your credit score, right? So that's the biggest thing, all right, is pay your bills on time. All right, now the second biggest thing, so number one biggest thing about your credit score is pay your bills on time. This number two, the second biggest thing about your credit score is your credit utilization, right? 30% of your score comes from your credit utilization. Your credit utilization is worth then up to 165 points. Now, what is credit utilization? Your credit utilization is the percentage of credit that you are using of the total credit amount that is available to you. So let's say that the credit card limit is $1,000, and let's say that you're using $100 of it. What is your credit utilization percentage at that point? 10%, right? 10%. All right. All right. Let's move to the next one. All right. Now the third. So let me just highlight the top two things that really impact your credit score is your payment history and your credit utilization. Those are the top two things. You want to really focus on those two things. Now, these other things, are important, but not as important as those top two things. All right, paying your bills on time and using only a small portion of the amount of credit that is available to you. It makes you look good when you're only using a small portion of the credit that's available to you, right? It causes red flags when someone is like maxing out a credit card, because it's like, wow, they're using all of the credit that's or a lot of the credit that's available to them, right? And then a little bit later, I'm going to show you a slide that talks about what's a healthy amount that you should be using of your total credit score. We'll get to that later. So now, all right, so the top two things is payment history and credit utilization. But now these other things also do impact, but on a smaller scale. 15% of your score comes from your credit age. So your credit age is worth up to 82.5 points. Your credit age is basically the average age of your accounts. So basically what that means is this: the longer that you've had an account open, the better it is for you, all right? The longer that you've had an account open. That's why when you're 18, right, you should go ahead and get a credit card, right? Because you want to start to build credit age, right? You know that they say the average age of a first-time home buyer is like early 30s, right? And so I was thinking about how a lot of times, just as a side note, a lot of times, unfortunately, a lot of people don't start to think about their credit until they're actually in the process of trying to buy a home. But you guys, I hope, will be different. I hope that you guys will start even now to be thinking about your credit score and how you can work different strategies to have a good credit score. We're going to talk a little bit later about becoming an authorized user on your parents' card. If your parents have good credit, that's a way that you can it's like a little hack, But anyway, we'll talk about that a little bit later. So, okay, 15% is about credit age. Okay, 10% of your score comes from your new credit. So your new credit is worth up to 55 points. Your new credit is influenced by things such as the amount of hard inquiries. It means that like every time you apply for new credit, the company will run your credit report, and it's usually a hard inquiry. And so that does hurt your credit score, but not as much as some of these other factors, right? But okay, so the amount of hard inquiries, the amount, the number of new account openings, and the amount of new debt obligations. So basically what they're saying is this, is that it causes a red flag if somebody's out here opening up all these new credit accounts, because it looks like, man, like why are they so desperate to get, to borrow money, right? It could be like a red flag, right? So that's why you want to start early to open up accounts so that you get an age and then those accounts become old accounts, The next thing, I'm sorry. And the remaining 10% of your score comes from your credit mix. So what your credit mix is like the mixture of, different types of credit accounts, right? So there's two major types of credit accounts. There's the revolving credit and installment credit. Now, what's the difference between revolving credit and installment credit? Well, revolving credit allows a borrower to spend the money they have borrowed, repay it, and then borrow again as needed, right? So it revolves, revolving credit. So, for example, credit cards and credit lines are examples of revolving credits. You're borrowing money, you're paying it back, you're borrowing money, it's revolving. Now, that's different than installment credits. Installment credit gives borrowers a lump sum, right? And they give the borrowers a fixed scheduled payments. So fixed scheduled payments are made until the loan is paid in full. So examples of installment credit are mortgages and auto loans, where it's just an installment. It's like the same payment amount each month that you're paying off to pay off the debt, right? That's installment loans. All right, so the next one.
Ready for the next one?
Yeah, I'm ready. Ready for the next one. Yeah, no worries. Okay, so how FICO scores are calculated. So there are over 16 versions of FICO scores, by the way. All right, but in general, they're following generally the same guidelines, but there are, just want to make a note, there are different types of FICO scores, right? So like when you go to try to get pre-approved to buy a home, they're going to be using a type of FICO score model that's slightly different than the one that if you're going to try to borrow money to buy a car, right? So lenders choose which score best suits their product to evaluate your risk level. So like I said, the mortgage lenders are using a different FICO version than the car dealership is. Now, the FICO scores 2, 4, and 5 are known as the mortgage scores. Those are the ones that are looked at a lot by the mortgage lenders. All right, so how to strategically pay your credit card bills. Okay, so, this is big. Regarding each credit card that you have, call the credit card company to find out what is the reporting date of the card. Now, usually the reporting date of the card is the end of the cycle, right? Is like the closing date on the statement, right? But not always. So you want to make sure you understand what is the reporting date. The reporting date is the date of each month the credit card company reports your balance to the 3 major credit reporting bureaus: Experian, Equifax, and TransUnion. Now, this is not the same as the payment due date. The payment due date is simply the date by which you must pay your bill to avoid interest charges on your transactions. Now, each month, your goal should be to get your credit utilization to be as low as possible. Like try to make it, some people say, hey, just keep it down under 30%, which is good if you keep it down under 30%. But if you keep it down under 10%, that's even better. And if you keep it down under 4%, or like 3%, that's even best, right? So you want to keep it low, but not 0. Side note, you don't want to always reporting 0 on the reporting date, because if you're reporting 0 on the reporting date, it's going to look like you're not using any credit at all, right? And that can hurt your credit, right? Because remember, the credit report and the credit score, it's a measure of how well you are managing debt, managing your finances. And so you do want to be using it, you know, and you want it to be reported, but not a high percentage, right? So you want to make sure that it's low by the reporting date, and you want to make sure you pay off your bill to zero by the payment due date, right? Because that's huge, because to avoid any interest charges, right, you have to pay it off in full by the payment due date, right? So, okay, so we'll go to the next one. Okay, how to use the credit threshold. Okay, so the credit thresholds. Okay, all right. So credit thresholds. So this is about what I was saying about how like a lot of people will say, okay, well, keep it down under 30%, which is good. But if you keep it down under like 10%, right, or like 8.9%, that's even better. But keep it down under 3.9%, that's even best, right? So you want to. So the key is this: you want to always only be using a small portion of the available credit. Now, here's the hack, right? Every so often, you want to call your credit card company and ask them to give you a credit limit increase, right? Because remember what we're talking about. If your credit limit is only $1,000, then, $100 is 10% of that. But if your credit limit is $10,000, then $1,000 is 10% of that, right? So, how to wisely build credit from scratch. Okay, so finding a lender to approve you for a loan can be an uphill battle if you're new to credit or credit invisible, right? Credit invisible consumers don't have enough payment history reported to the credit bureaus to produce a credit score. Lacking credit history may not seem like a problem if you primarily use cash and have no need to borrow money, but when it comes time to finance a home, not having a credit history or having a thin credit file could be a barrier standing between you and a new house. A strong credit profile can also be important when you're renting an apartment, opening utility accounts, buying insurance, and even applying for a job, right? So the good news is that it is possible to build good credit from scratch, and getting started today could put you in a better position to meet your financial goals of tomorrow. So on the next slide, we're going to talk about how to do the two major ways, two key ways that you can start building credit, all right? Number one is become an authorized user. So that's what I was saying, like if you're, maybe a conversation to have with your parents is ask them if they have good credit. And if they have good credit, maybe ask them if they can make you an authorized user on their credit card. Because as an authorized user, you'll be added to the primary cardholder's account. The credit card account and his payment history will appear on your credit report, helping you establish a credit history and score. I know of a family that what they do is when the child becomes 16 years old, they make the child an authorized user on the parent's credit card account, so that between the age of 16 and 18, by the time that they're 18, they have already now built up a very high credit score, so it's like a little hack, So let's see, the credit account, will appear on your credit report, helping you establish a credit history and score. Okay, now, of course though, you got to be selective with whose credit history you decide to piggyback on. You shall only become an authorized user on an account where the primary cardholder has an excellent payment history and keeps the balance low. All right, now the second trick is apply for a secured card. Applying for your own secured credit card can be an excellent way to build credit. A secured card is typically easier to qualify for than a traditional unsecured card, because a secured card, it requires a deposit up front that secures your credit line, right? So basically, getting a secured card is easy to get even if you have no credit, because basically with a secured card, you're going to give the company, like, let's say $200, right? And they're going to hold that $200, and then they're going to give you a secured credit card because it's secured by your deposit. They're going to give you a card with a limit of $200, right? And then you can just use it like a credit card, but you have a limit of $200, right? And so once you establish a positive payment history on the secured card, you can then get your deposit back, and you'll get the opportunity to upgrade to an unsecured card, right?
So college banks are good for this, near your college campuses. They'll offer the secured ones. You stay with them a couple of years, you increase it. $200 to $500 if you're working. Otherwise, if $200 fits, but you can't even buy an airline ticket in most cases under $200 unless you're really lucky. So you may want to have it $500.
True.
And then from there, ask them for an unsecured card, which means they're going to give you $1,000 or $500 on their terms, where you're not giving up any of your money. But the catch is paying it monthly, not to have any interest on it.
Right.
Okay? But you're not going to get away without a credit card.
Right.
It just doesn't work that way anymore.
Right. You needed to build
Like
credit.
you said, invisible credit isn't good either, because that doesn't prove you're credit worthy.
Right.
Why should I give you $30,000 for a car loan? You haven't proven to me you can pay anything back.
That's
So I'm not going to give you. I'm going to give you zero.
That's right.
So that's why we need to bring this up
Right.
at home. Talk about college as well. What's going to happen at college? Who's going to help you pay that bill?
Right.
We're going to do a college loans, and we're going to do another session on credit as well.
Right. Unfortunately, a lot of people have struggled with credit cards, right? You know, and been very irresponsible. But if you're responsible with it, it'll work for you and not against you. One of the things to consider is this, is that when you get your credit card, maybe only use it for like routine purchases. Like don't go shopping necessarily with a credit card, because research studies have shown that if you go shopping with a credit card, usually you're going to end up overspending, right? Because when you pay with cash, it's more of an emotional experience when you're actually paying for something with cash than when you're paying with a credit card. So that's why I'm saying, like one of the things I recommend to young people is, you know, when you buy gas, use the credit card, right? Because it's like just a routine necessary. But when you go shopping for clothes, you know, you got to be careful with that, right? So.
Yes, is all
right. Or if you have certain subscriptions for stuff, you know, you could put the subscriptions on the credit card, right? Because these are just routine. You know, I'm just thinking about ways that you can kind of like, you know, be careful not to overspend. That's the thing.
I've had students come back to me and tell me that their $10 pizza cost them $100. Took them 4 years to pay their credit cards. They had to pay it after college. So a $10 pizza could cost you $100 if you don't pay off your bills at the right time. So do not spend money unless you have the money in the bank account.
That's right. And you know, they say what, like 70% of lottery winners go broke after a few years. So hopefully that wasn't the case with you.
Yeah, I don't know, I have to ask her.
You know, but that's something.
Sure
and you know why?
And
it makes sense because, you know, if you give somebody a lot of money that's not used to managing money, then a lot of times they're going to misuse it. You know, so.
That's why you see some of these big lottery winners, talk about lottery real quick, they get a financial manager right away. And that's what you need. If you have something like that, if you're pleasantly surprised, you inherit a lot of money or something, you need to figure out how to work it. But most of us are not in that ballgame. We're starting from the bottom, working our way up. Learning about his family, they were wise about all that. So if you come from a wise family, listen up. If not, you need to help train your family as well.
That's right.
And then your own family.
That's right.
In a few years, you'll be out of college, and it goes pretty fast.
That's right.
And you'll be an entrepreneur like Mr. Smith here. Look how many things.
And doing work that you love, right?
That's important.
You know, that's important, you know, And so here's the thing, I mean, so some people are blessed to be born into families where they have like wise mentors. Like, for example, my older brother, Marlon, he was the one, when I was 18, he was the one that encouraged me to start investing into mutual funds.
Nice.
And that's been a big blessing because of the power of compound interest and everything. But here's the thing, even if you don't have family members that are very financially savvy, there's mentors that you can reach out to. Also too, don't underestimate the power of YouTube. I mean, there's a lot now, there's a lot of like garbage on YouTube, but also there's a lot of great education that you can get off YouTube. If you Google this stuff about building credit reporting, or investing in the stock market, or investing in real estate, or investing in rental properties, you know, and everything, you get a lot of. So I think another big point is that this education is a continual education. You have to really continually educate yourself regarding finances and business.
But nobody teaches you this. I went to business school first, my first degree. No one told us this. We learned all this on our own.
True.
So now that we're sharing this with you guys, you get an extra easy step about how to pay attention. Because the next report card in life is your credit score.
That's right.
And that will determine what you pay every month. How many of you like a $10 coupon? You like $10 coupons? If I gave you a coupon to go to your favorite store to eat, would you take it? Yeah, sure. Imagine saving hundreds and thousands of dollars a month on getting interest rates the lowest you can. That's how you're saving money.
You don't need to put your name on it, that's fine. You don't need to put your name on it, but please put your age and your gender, and please respond, was this presentation useful to you? We got...
They really won't get it until a little later.
I know.
I get emails from 10 and 20 and 30 years ago. How useful that all these presentations in the finance class.
True.
And one time we taught consumer math and business math. I still hear emails. We did the stock market game in every one of those classes.
Yeah, it took it out? Like why
now they have quantitative math, which is similar.
Oh, okay.
But back then we had 2 when I started here at Whitman. And literally, I can show you emails and letters that I've gotten.
That's awesome. That must be so rewarding to know, you know? That,
well, that's the good thing about finding a job you like doing, right?